Hello and welcome to Market Matters. Today we're focusing on one of India's most iconic companies, Tata Steel. The stock has taken a noticeable dip recently, and there's a lot of chatter in the markets about what's behind it. We've seen some major headlines: US tariff hikes, internal board changes, legal challenges, and concerns around performance in their European units. Meanwhile, global steel prices have been under pressure, and investors are watching closely. So to break it all down, I want to ask, what's really driving this decline? What are the major global and domestic challenges facing Tata Steel? How are things looking in their financials? And finally, what should investors expect from the stock over the next year? Joining us to answer all that is market expert Rajiv Sharma.
Thanks. Good to be here. Tata Steel is in a tough spot, not because it's a weak company, but because the environment around it has shifted quickly and not in its favor. Let's start with the recent price decline. The stock dropped around 2.5% recently, and the big catalyst was the US decision to double tariffs on steel and aluminium imports to 50%. That's a major blow to exporters globally, and Tata's UK and European operations are especially exposed. Investors reacted swiftly, and understandably so. Now add in the oversupply of steel from China, where domestic demand has weakened and producers are dumping excess steel into global markets. That's driving prices down, which hurts margins for everyone, including Tata Steel. Financially, FY24 was rough. Revenue dropped about 6%, net loss was nearly 5,000 crore, and their debt sits around 87,000 crore, partly due to ongoing investments, especially in European restructuring and green transition projects. The UK arm alone posted a $1.1 billion loss, which is huge. So when you zoom out, there are really three main reasons the stock is struggling. Heavy losses in Europe, particularly in the UK. Depressed global steel prices, largely due to Chinese oversupply. And high capital expenditure and debt, which limits flexibility in a tight market. Now, looking ahead, where's the stock going? In a bearish scenario, where global demand stays weak and losses continue, we might see the price fall toward 135. If things stabilize a bit, we could hover around 155. But if Europe shows signs of recovery and Tata manages to cut costs and reduce debt, then a move toward 180, 185 is possible. So Tata Steel isn't a weak company, but it's a strong company under pressure. Long term, it still has the potential to deliver, but in the short term, it's navigating some real turbulence.